This is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 14th of July. Starting with the FTSE 100, where we've had decent price action back above the old June low at 74.01. Above that on an end of day close basis, looking for the market to head up to the 200-day line again, 75.50, and maybe even break the 50 and 50-day moving average and the April resistance line around 75.70. If we can do that, there's the hope of heading up to 7800 and unwinding the post-April decline for this market, which was rather painful, one could say. Missing ingredient at the moment is the RSI getting back above neutral 50. It's at 47.6. We haven't been above the neutral level since the beginning of May, which is a long time in relative terms for a market to be below the neutral 50 level. Obviously underlines the bearish sentiment that there has been in the recent past. Onto the DAX, which is never been as bad as the FTSE 100. We've broken a line of resistance from last month, which is good. We're above the 50-day moving average at 15,900, and above that looking for a retest at least of May-June resistance up towards 16,400. Best case scenario is that we head up to 17,100 by the end of next month, which is the top of that rising trend channel from August last year. On the downside, if things go pear-shaped, 15,500, and the floor of that channel looks to be the worst that we can expect. RSI at 54, so in a good place for further build. Moving on to the Dow, and here I suppose it's just good news that the longer we're above 34,000, the better. This is the third time we're trying to break through 34,500 and basically post-August 2022 resistance. It's obviously, the market's obviously thinking about it. Above 34,000, looking for 35,100, which is the top of that March trend channel. Not expecting anything worse than the 50-day line at 33,700. RSI at 59, which is in a good place for making further recovery. And hopefully we'll end the week above the 34,500 level. That would be at least a decent psychological boost. Moving on to Bitcoin, where we're hoping that might be celebrating the return of Ripple, but having another go at giving us that elusive end-of-day close, or in this case, end-of-week close above 31,000 or so. If we can break through the 31,000 area on an end-of-day close basis, the next level up could be up towards 36,000, which is the top of that rising trend channel from July last year. Time frame on that maybe as soon as the end of this month, although I suppose we're really looking for the end of next month to get up to 36,000 here. And if you're cautious, you'd wait for a break of 32,000 rather than 31,000 before assuming that we've finally broken out of this extended bull flag. Onto the stocks, and an obvious winner from a better sentiment in the crypto area is Argo blockchain. Interesting that we've, on the quiet, the shares have managed to hit one of our targets, which seemed rather ambitious, around 18 pence, but got up to 18 and a half. But that was on the cards once we broke back above the 200-day moving average at 12 pence. And an unfilled gap to the upside today is a show of strength. We haven't actually been above the 200-day line since back in the autumn of 2021. So that's quite an achievement for this market to do that this week. Weekly close above the 200-day line shows a change in trend. And we've also got the 50-day line rising too. Above 18, looking for 25 pence as soon as the end of next month. And ideally, we stay above that 13 pence June resistance ahead of such a move. On to Deltic, which is sort of rising every day at the moment. Here we've got another roughly 7% rise. We were looking for 42 pence, and seems to be tantalizingly close now. Maybe we could upgrade that to 43 at the top of that triangle from back in March. Perfect bear trap gap reversal, and the shares never looked back after settling above that 50-day line. Only back below, at this stage, back below the low 30s, really delaying the upside scenario of 43 pence by the end of this month. Moving on to Empire Metals, where the market's still apparently kicking the tires on the recent very positive developments of the company with a massive titanium asset as well. It looks as though we're going to head up towards the top of that channel there from this time last year at 3.5 pence, and we could even do that as soon as the end of this month, especially the more time that we have spent above the 2.5 pence level, which was initial July resistance. The other positives to note, or positive to note, is the way that 50 and 200-day moving averages both rising at the moment in parallel, and obviously the rally here started with a bear trap gap reversal from below May support, so that's pretty strong stuff all round there for Empire Metals. Stock which I've been looking at as a potential recovery situation has been Empyrean Energy, if I could spit it out. Here we bounced off the floor of this falling trend channel. That was towards zero point 0.7, and we've managed to break back above the initial June support at 0.78, 0.79 rather, above 0.79, looking for the shares to flip up to as high as 1.3, maybe as soon as the end of next month, 1.3 pence, the top of that channel from the end of December. Moving on to a stock which I wish I'd looked at yesterday, but I missed it, Ferro-Alloy. And here we've broken a line of resistance there from back in November, broken above the 200-day line, which looks as though it's now rising along with the 50-day line. So it suggests we could be in the run up to a golden cross. Initial target here, while we're above that line at 11 pence, is up to 14. If you're a fan of the shares and looking for greater glories, then probably we'd be looking at a target as high as 17 or 18 pence by the end of next month, if you assume that this is a broadening triangle base that we've had since September last year. But the levels there basically 11, 14 and up to 18 on Ferro-Alloy. On to GreenX, which is proving one of the rules that when you see a stock which rises after the company raises money, it's a good sign and a bullish sign. Unfull gap to the upside today after the bear trap below the 50-day line. Breaking that June resistance line suggests that we're now ready to head up to as high as 70 pence by the end of next month, which is the top of a rising trend channel from back in October. Upside valid, certainly while we're above the 50-day line at 47. On to Helium 1, which is really delivering for the bulls at the moment, probably over-delivering actually, rising quicker than expected. Vertical move after that one-day bear trap below 5 pence. Great technical signal there. Sort of abandoned one-day bar. That would have flushed out the weak hands, and we were nearly back down to the all-time low there, or the initial lows there, 3.75 pence. Current situation is what we were looking for, that above 9 pence or 9.5 pence on an end of day close basis, looking for as high as 14 or 15 pence, and that could happen. The way things are going, that could happen as soon as the end of this month. Ideally, we stay above 9 pence, which was the old November peak on that back at the end of last year. So above 9, looking for up to 15 on Helium 1, which is moving as I speak. We've got the 50 and 200-day moving averages both rising as well. So that is an extra technical bonus. Stock that doesn't get much coverage here or anywhere is KR1, largely because it's on Aquis, but I do keep an eye on it. And here we've had a very strong bull flag breakout, which actually is mirroring what we expect to see on Bitcoin. So we've been sideways since the latter part of June, and we've broken higher. We hit our initial target there around 63 pence. End of day or end of week close above 63 pence could take us to 80 pence as soon as the end of next month, and maybe even by the end of this month, by the way things are going. Golden cross between the 50 and 200-day moving averages as well, and that should add extra momentum to this situation. Feeling bullish about this while we're above the 2023 resistance at 56, which should hold over the near term. A stock which raised a lot of money, and the shares are pushing higher. I think it was on contract news. Massive unfilled gap to the upside. We also had one back in March, where people were obviously successfully guessing that there would be a massive contract for the company. Resistance line projection there from December is heading up to as high as £4.20. We expect that as soon as the end of this month, given the way that we are now on our third unfilled gap to the upside in the recent past. Upside value while we hold above the top of that the second last gap at £3.35, above 3.33.35, looking for 4.20 on Kooth. Moving on to a stock which also doesn't get much coverage, but here we are. OB, otherwise known as Ondine Biomedical. Here it looks like we've got a bear trap reversal, falling wedge breakout as well. Above 13 pence, we're looking for, on an end of day close basis, we're looking for the shares to head up to as high as 21 pence by the end of next month. It's a bear trap also below the initial 2023 support at 14 pence. So the more time we spend above 14 over the near term, the more confident we would be that the shares are heading up to 22 pence by the end of next month. A bit of a rebound in Pensana, which is probably much appreciated by its shareholders. They've not exactly had a party over the recent past. What's interesting now, there's been a rebound from the lows there, just below 15 pence. And the view now is that we'd like to see the shares back above the April support there at 22 pence. But the other point to note here is that we had much lower lows for July, but the RSI was no lower than it was when the shares were higher back in April and May. So that's quite a strong bullish divergence, and that could power the shares up to 26 pence or 27 pence, which is the top of that falling channel from the end of May. Looking for 27 pence maybe as soon as the end of this month. Perhaps the major shareholders who bought earlier in the year may be dipping their toe in the water, and we'll get an announcement that they have done so in the teens as well. At this stage, only back below recent support around 16 pence, and if you're fussy, 18 pence, which was support on the way down earlier this month, as the stop losses. Looking on to the last two now. First one is Smoove, which is actually spelled like that, which is rather interesting. Here we've got trendline break from May and a break of the 200-day moving average at 38 pence. Above that, we're looking for the top of that rising trend channel from February as high as 53 pence as soon as the end of next month. You see the rally there started with an unfilled gap to the upside, and that does tend to be a strong signal, even though obviously we had a gap down there with a double top around 50 pence, but above 38, looking for the mid 50s on Smoove. Finishing off with Upland, which seems to be very busy if you judge by today's RNS, which had plenty of decent developments in it. Here we're looking for, after that trendline break from January, which also broke above the shares also broke above the 50 and 200-day moving averages, above 0.5, looking for the stock to retest the best levels of the year at 0.8, perhaps as soon as the end of next month. Big picture target here, probably up towards 0.9, which is the top of that, effectively the top of that triangle there from the turn of the year. That's it from me today. More updates tomorrow.